What's good on my trader and investor homies? It's your boy Kevin. This is Touchdown Trades. We are getting $600 in free money. Stimulus checks are flying out of the government's pocket into our wallets. Every single day we're getting our $600 in stimulus, and a lot of us have already received the checks. And there's even talks that we're gonna get more, even up to $2,000 per person, as the Democrats have control of all three major branches of the government. And the Democrats are known to be big spenders, and they're gonna want to get more stimulus out there. So what are we gonna do with this free money? Free money, what do? You really got only three options. Option number one, bet it all on the Tampa Bay Buccaneers and Tom Brady to win the Super Bowl. In my opinion, not a bad option. TB12 never lets you down. Option number two, go down to the local gentleman's club and spend it all on a girl named Cinnamon who only has 2 or 3 teeth left. That option's kind of shaky. Option number three, invest it in some really good top-notch growth stocks. And I'd say that's probably the best option. So in today's video, we're going to be talking about my personal top 3 stocks to invest your stimulus checks in. We're going to be breaking them down. They're all 3 growth stocks. We're going to look at them from a fundamental business model perspective and a technical analysis perspective. Take a look at the charts, talk about my price targets and forecasts, and my plan on investing in all 3 of these stocks. So as always, do me one big favor and go down there and hit that like button. Go down there and just start clicking all the buttons. If you're new to the channel, we talk about the hottest stocks in the market every single day. So hit that subscribe button and the notification bell. All right, guys, let's break down my top 3 stocks to invest your stimulus money in. Let's get it. The Democrats have control of the White House, the House, and the Senate. And typically Democrats are big spenders. They are going to want to get stimulus out. And news came out yesterday that Uncle Joe Biden himself is putting together a stimulus package for the people. We already got $600 in our pockets. We already got those checks. Now there's news of more money coming in. So we're going to be breaking down some really high quality growth stocks that I think are good investments for your stimulus money. All right, guys, before we get started, check out the link in the description. Webull and Touchdown Trades have partnered up, and if you go down in the description, click that link, and to open an account, deposit $100 or more, you will get 4 free stocks valued up to $3,700. That is literally free money. That deal's about to end, so don't miss it. Get your free money on top of your stimulus money. You'll already be starting out with a pretty nice sized investing account with just free money. Ticker number 1 is going to be APPS, Digital Turbine Inc. This is a company that I call the baby Roku, and I think it has huge growth potential. Digital Turbine, simplify discovery, direct delivery. Digital Turbine's on-device media platform makes it easier than ever before for people to discover new apps and content. So think the Apple App Store, but not ran by Apple. Think Roku. So basically this is an app delivery software where people can go on to Digital Turbine on an Android device and look for apps, download apps, and they're making money through advertisers. So this is going to be targeted at cell phones that are not Apple, that are not Samsung. And basically what this is an Apple App Store, but not Apple. So you buy a phone, maybe a smaller brand name phone, and Digital Turbine will sell the software to that cell phone manufacturer for these apps. And they make money through advertising the apps. They get a kickback if the app is downloaded. It's a very good reoccurring revenue business model, and I also see huge potential for this company to get into the smart TV network. Think Roku. Roku is killing the game, setting up their software for smart TVs, but they're only doing a couple brands of TVs. This is opening the door for Digital Turbine to get in there, make smart TV software, and advertise those apps. The company is operating at a global scale. We have 40 plus partnerships, 4.2 billion apps delivered globally across devices. 4.2 billion apps. That is a lot of apps. 50 plus million devices with Digital Turbine software. Every device with the Digital Turbine software is a dollar sign because when they're downloading apps and advertisers are spending money, Digital Turbine is making money. 10 plus million daily added units for content media software. 20 million new devices per month. Huge numbers. 150 plus countries. 70% of the top apps are on Digital Turbine. Digital Turbine has some huge partners, some huge customers: Verizon, AT&T, T-Mobile, TracFone, Cricket, Telefonica, US Cellular, Metro. Who else we got? Samsung, LG, Lenovo, Motorola, Blue. Right now, they're primarily focused on the cell phone aspect of things. But where I think the real growth can come from is getting with these TV providers, LG, Samsung, other TV makers, and getting in that smart TV software, building an app store for smart TVs. You go to the main menu, and there's a bunch of apps you can download. That is going to be huge business. Take some of that market share away from Roku. Monetization starts at first boot. Dynamic installs drive engagement and monetization from day one. So we have a cell phone over here. This is what it's going to look like. You have your Digital Turbine little thing there. That is the app store for this off-brand phone. So this is probably not going to be a Samsung. It's probably not going to be an iPhone. So if you buy a TracFone or another smaller phone manufacturer, they may have this Digital Turbine app store already loaded, already used, ready to go. 100% seamless integration. So new products drive ongoing revenue streams. We have the home screen over here, and then we have the toolbar, the web portal, and everything is making money through advertising and through app downloads. All right, let's look at this stupid revenue growth. 2017, we start over here with $10 million. Look at this chart, just straight to the moon. And by 2021, fiscal quarter 2 of 2021, we have $70 million in revenue. That is 116% year over year. And we have the adjusted EBITDA, huge growth as well, from net losing money all the way up to profitable of $17 million. Huge, quick growth. Right now, Digital Turbine is trading with a market cap of a little bit under $5 billion. I think this stock is still undervalued, even though it's made a huge move. It has made a really nice move, so I am personally waiting on a pullback back down to support. We have a nice area of support down there at 43.50. So we've been chopping around. We ran up over that resistance, and we're kind of chopping around, pulling back. And I want to see a pullback into that 43.50. I'm going to look to invest and then look for this thing to break out towards all-time highs, $64, $65 a share. So my 12-month price target, $65 a share on this stock. Pretty nice increase there, over 50% in the next 12 months. That's what I'm looking for from this APPS. Stock number 2 to invest your stimulus check in is going to be ticker symbol ASAN, Asana Inc. This is a software company that I compared to something similar to Slack. It helps companies organize their employees, keep their employees organized, and this is huge in today's time because people are working remotely, people are working from home, and it's important to make sure that your employees are getting that work done, they know what they're doing, and keeping everything in order. Work on big ideas without the busy work. From the small stuff to the big picture, Asana organizes work so teams are clear what to do, why it matters, and how to get it done. Let's take a look at the website real quick. Project management, see who's doing what and when, so you can make a list of stuff that your employees need to get done, and you can keep track of your employees, making sure they're doing what you want them to do. We have messaging timelines. It's very similar to Slack, but they offer a little bit more than a company like Slack does. Slack is just a chat, right? This Asana offers much more than that. Let's see what they offer. So we have project management. I think that's going to be huge in today's time. So you can design a project, assign a team to it, and make sure it's getting done. We also have remote teams. This is going to be huge in today's time. People aren't going to the office as much, and it's changed forever. That's not going back once the Rhinoceros Rex goes away. People in companies know that they can save money by having their employees work from home. But when your employees are working from home, you need to be sure that they're getting the job done. And that's where a stock a company like Asana comes into place. They're also involved in marketing. So this is basically a one-stop shop for companies to keep track of their employees, keep track of their analytics and their data. So you can, if you have a marketing campaign that's going on, you can keep track of it, seeing how well it's doing. You're spending how much money and how much is coming in, how much revenue is coming in based on that marketing campaign. How much spent versus how much is coming in. Huge data, huge reoccurring revenue. Let's take a quick look at the investor presentation. Huge revenue growth. Q3 fiscal year 21, we had 60% revenue growth. We had 125% customers spending 5K or plus in Q3 21. That's each customer spending 5K plus. That is big right there. 89,000 paying customers in 190 countries worldwide. They've done some research and they found that teams spend less than half the day doing critical work. So you have people at home, they're messing around, they're not getting their work done. Asana can make their teams and employees more efficient and make a company more profitable. Or you would have people working at home, and in order to get everything together, you would have email, you'd have Slack, you'd have Gmail, Google Drive. It was just nuts. Salesforce, you would just have everything scattered around. Asana comes in, brings that all together, makes everybody more efficient. So they did a case study with one of their customers, which is a Fortune 500 insurance company. And initially, the company started with 50 seats, and they just wanted to test Asana out. That was in 2015. By 2020, they signed a 2-year contract, and they added 3,200 seats for their employees. So obviously, this Fortune 500 company was impressed with Asana. They signed a longer-term deal, and they've added 3,000 plus employees of theirs to Asana. Revenue growth is huge. All right, so fiscal year 19, 77 million. Fiscal year 20, 143 million, 86% year-over-year revenue growth. We like to see those numbers, huge numbers there, 77 million to 143 million. I think that growth is going to continue to look straight to the moon. Right now, we're trading at a market cap of under $5 billion. Too cheap for this company, especially the time we're in. This company is going to continue to grow as people stay at home. People are not going back to the office. Even after this is all over, companies are going to be more efficient using products and services like Asana. This is a company that gets reoccurring revenue. I love reoccurring revenue. I love software as a service. This checks all the boxes. You have fast growth, reoccurring revenue, software as a service. They solve a problem. Companies that we want to invest in have to solve a problem. They check all the boxes. We have support down here at 27. That's where I'll look to buy. Boom. Right here, we touch 27. Right here, we touch 27. And we have a bunch of volume traded right here at 27. It's going to be hard for this stock to get back down towards under 27. So I'm going to look to buy from 29 to 27 is my buy zone. And then I hold looking for all-time highs up near 33. So I'm putting a 12-month price target of $40 a share on this ASAN. The third stock we're going to be breaking down is FUBO. FUBO TV Inc., ticker FUBO. This is an online TV platform, a cable killer, if you will. In 2019 alone, large cable and satellite companies lost 5.5 million traditional pay TV subscribers last year, compared with 3.2 million in 2018. So, cable's growth numbers look like this. They're losing customers. People are cutting the cord. They don't want to pay the high price of cable. Why? Because companies like FUBO TV. You go on Roku, look at the main screen of Roku. You will see a little box for FUBO TV, and it's cable. It's cable without the cable. You don't have to have the smelly cable dude come in your house, put wires through your walls. You can't get cable. You have to get the dish put on your roof. The state flower of Alabama. Nobody wants that. So you can have FUBO TV, and it's basically cable, and you can get it on your phone. You can get it on your TV or smart TV. You get all the channels. Look at all the channels: ABC, CBS, Fox. Then you have the cable TV channel. We got MTV. Here they are. MTV, the History Channel, Fuse, the Food Channel, Fox, Fox Business, Fox News. We have the Soccer Channel. We have ESPN, FX, ACC network. It's customizable as well. Very customizable. You don't have to deal with the sketchy cable companies. You can add HBO. You can add, if you're big into the NBA, you can add the NBA. You get sports, all the sports you want. The MLB network, golf, news, movie channels. It's literally much better than cable. Way better than cable. Sales quarter over quarter grew almost 1,000%. Stupid growth here with FUBO TV. We're at a market cap of under $2 billion, and here's where things get crazy. 40% of the float is sold short. That is ridiculous. So what is going to happen here? Let's go to the chart. This thing made a huge move, right? It made a move from under $10 a share right there, ran up steadily. People were getting short. And then what happened? They got squeezed. And they haven't been let out yet. They're still stuck right here. We got a nice pullback down to $24 a share, but those short sellers who are right here, they're still stuck. And I think we hold that support. There's a lot of volume traded from $12 to $25. I think we hold that area. So any pullback down under this $24 on FUBO, I'm buying. I want to see it crack this 24. The shorts are going to get cocky. Maybe they'll add to their position, and then this thing's going to short squeeze them out and head back towards those all-time highs. I'm going to put a 12-month price target of $45 per share on this FUBO TV. I think their revenue numbers, their subscriber numbers are going to continue to grow exponentially as people cut cords and they look for alternatives to the nasty cable that we're all used to. All right, guys, those are my top 3 stocks to invest your stimulus checks in. Hope you guys got something from it. If you did, hit that like button for me. It really helps me out with the YouTube algorithm. I'll catch you guys in the next one. Until next time, peace.